If you want to learn how to increase your daily win rate, minimize the amount of losing trades you take, and at the same time maximizing your reward, then this is the video for you. And also, we're going to go back, we're going to use the replay mode on TradingView to show you guys some of the trades I took last week and breaking down the exact reasoning behind these trades. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so I actually want to start this video off with a DM that I got on Instagram today because this is very important and I can guarantee it's going to help you guys in the future. The DM says, "Yo, Brandon, I use supply and demand a lot, but recently market's been weird and I haven't been able to find the quality trades I used to or at all. Do you have any advice or something I might be doing wrong?" And this was my answer. Wait until it's present. If it isn't, you don't trade. And that's the truth. Because when it comes to trading, we only want to trade when our setups are present. If you guys have been following me on Instagram or joining the live trading, you guys have noticed over the last couple of months, the amount of trades that I have taken have gone down significantly. And the amount of days that I've actually traded has also gone down significantly. But that's because the market hasn't been offering me my A+ setups. And because of that, I sit on my hands and I don't take a trade until that setup is present. And as traders, as soon as we go and start forcing trades, that's when we're going to lose money. That's when our win rate is going to get destroyed. And overall, you're going to keep taking losers if you're forcing subpar setups. So now, how can we increase our win rate? And the answer is actually very simple. As I mentioned, only trading when you get an A+ setup. So for example, last week, a setup that I was watching was for price to come up on ES into this 4-hour supply zone. So the trade I actually ended up taking was on Friday. This 4-hour supply zone was formed on Thursday. I have tons of videos on how to draw supply and demand. So if you guys don't know how to do that, I will be leaving those videos down in the description. But we have our basing candle right here. So we're going to take the high to the opening of that basing candle and we're going to extend it to the right. So here's our 4-hour supply zone. But also inside of this 4-hour supply zone, we also had 1-hour supply. So the 1-hour supply is going to start right here and it goes all the way up into this high point right there. And then finally inside of that 1-hour supply, we also had 45-minute supplies starting at the same exact point. So now going back to the day where I actually ended up taking this trade, because this was a high probability reject area for me. The reason it was high probability is because we had 4-hour supply, 1-hour supply, and 45-minute supply all in this same area right here. That's an area that we want to be looking for trades. Everything down here, I didn't care about. I only cared if price came up into this area for a reject. So if we go to my Thursday watch list, I did have a fib that I was watching right here. Let's actually pop this open so you guys can see it. But this screenshot's on SPY. It's the same exact thing. You can see that I had the 61.8 right there. I was watching 560 originally, but if I pull up the Discord again, you can see if price gets above there, we have a huge supply zone from 561.3 to 563.15. So again, 4-hour supply, 45-minute supply, and 1-hour supply. And also you can see in that watch list that I did not have a bounce. So really the only area I was interested in SPY for a reject besides the fib was this supply zone. So now if we break it down to a 5-minute time frame, you can see that off the open, we didn't really do much. But a little later, once we got news at 10 o'clock, we had this massive push up into the supply zone. So now at this point, I do not care about long entries whatsoever because we're in supply. I only care about rejects. Now, typically when it comes to trading supply, I'm mainly interested at the beginning of the zones. So for the reject, originally I was watching the beginning of the 4-hour zone, but because price got above the beginning of that 4-hour zone, I was then watching the beginning of that 45 and 1-hour zone. So we have this massive push up on this 5-minute candle right here. Price pushes up a little more on this 5-minute candle right here, but what we notice is weaker volume. Now on this third candle right here, we push up into the zone and we get this massive reject with this very long upper wick right here. And this is ideally what I like to look for when price is going into a supply zone. I like to see a huge push into that area because regardless, price is likely going to retrace. It's not just going to go straight up forever. So that increases the likelihood that price is going to pull back and we can take advantage of that. So once I started to notice, one, we were going up off a weak volume, but then second, this candle right here rejecting the beginning of that 45 and 1-hour zone with this very long upper wick, that is when I decided to go short and would stop out if we broke above the high of this candle. Once this next candle pushed up into this level and started to pull back down, that is when I actually entered short and was able to capture a beautiful move all the way down into this 5-minute 8 EMA. So from my entry, if we're talking in like ES terms, I would say my entry was probably closer to like 56, 53, so like right here. And there was literally no drawdown when we entered the position. It literally went straight down all the way down to a low of 56.37. And this is what I mean by only taking high probability trades, because had there not been a supply zone here, I probably wouldn't have cared about this trade. So a majority of my key levels are coming from these higher time frames, the 1 hour, the 4 hour, daily, weekly, 2 hour, 45 minute. I know I just threw a bunch of different time frames out there, but it's higher time frame setups, and I'm simply just breaking it down to a smaller time frame such as the 5-minute, 15-minute, or 2-minute time frame to identify an entry. So that was one of the trades that I ended up taking last week. Now another trade that I ended up taking last week was on Amazon. And this was actually a very nice trade as well. And this trade ended up happening on Wednesday. So if we zoom out to the daily time frame on Amazon, you can see that Amazon had this huge daily gap fill to the upside. So this is where the gap fill was at, and this was the gap entry. So as soon as price started breaking above this high, there was a very high probability that we continued to fill this gap to the upside. So as price was getting closer and closer to this gap, I had a feeling that it was just gonna go ahead and fill it. So now if we break it down to a 1 hour time frame, we can see that the days going into that gap fill, price kept rejecting this overall area right here. So the day that I actually ended up trading Amazon was this day right here. Reason being, we rejected this area a bunch, and then finally in the pre-market, we gapped above the level. So my game plan was to look for an uptrend entry into the gap fill, or for price to pull back towards this area of resistance to look for a bounce. Now, personally, I just took it up into the gap fill, but you can see that the bounce did end up working. But let's actually talk about the trade I ended up taking. So if we head back on over to Wednesday, and this trade was based off of the 2-minute time frame, you can see again, as price gapped up above that previous area of resistance, we did set this pre-market high right here. So what I was looking for, and I actually ended up trading this live here on YouTube, was for price to break above this pre-market high and come back and retest it as support. So if you guys were in the live stream, you heard me say, I want to look for price to have a solid candle close above this pre-market high and then pull back and retest it. Again, this is an A+ setup for me. So as price broke above it, you can see that we had a solid 2-minute green candle close. And then from there, I was looking for that pullback. So the area of interest I was watching was this 180.4, but also at the same time, we did have a Fibonacci retracement from this pivot low to this pivot high right here. So we had the 50% retracement also lining up with that pre-market high, but also the 61.8% retracement. So as price started to bounce off of that 61.8 and reclaim that pre-market high, that is when I got long, and you guys can hear me inside of the live saying, my stop loss is right below the low of this wick. So realistically, we were risking probably like 35 to 40 cents on this trade, and I was able to capture this move all the way up into here. Again, taking trims as we ended up hitting the highs, breaking above the highs, but overall, it was a fantastic trade. So those were my 2 main trades last week. And another thing that I was talking about earlier is my swing trading strategy. I switched up my swing trading this year. I've taken significantly less swing trades, but they're based off of higher time frames. Like a swing trade that I'm in right now that did 75% is this IYR swing. So right now I'm basing my swing trades, a majority of them, off of the quarterly time frame. So every single quarter, and actually I have the screenshots right here, every single quarter is going to represent 3 months. So when I ended up taking this trade, I'll show you guys both of the entries. My first entry was this day right here, and then my second entry was this day right here. I picked up the $97 calls and the $100 calls, and this was an A+ setup for me. Reason being, if we pull up my swing trading chart and we head on over to the quarterly time frame, this is everything that I look for in a swing. I like to see price holding the quarterly 21 and 34 EMA, which you see we had going on right here. I like to see a quarterly squeeze, which is these red dots down here, and then a quarterly stochastic buy signal. This all validated a long entry to the upside. So that was a beautiful swing, and I still have some of my position running. Another one, you guys heard me talk about this a lot earlier in the year, silver. We entered at the end of this quarter right here, and the contracts did 150%. So the point that I'm trying to make in this video is if you want to increase your daily win rate and your accuracy overall, you have to only be trading when an A+ setup is present. If you don't see an A+ setup and it doesn't meet your criteria, guess what? You don't take the trade. You sit on your hands and you wait. Because like I said earlier in this video, the amount of trades that I've taken over the last couple months have gone significantly down. And that's because the market hasn't been offering me opportunity. And if the market's not offering me opportunity, I'm not going to put my capital at risk. Trust me, I've made this mistake many times where I force a trade and as a result, I lose money. And the result of losing money is being stressed out. So if I want to be mentally sane and not stressed out, don't force subpar setups and lose money. But if you guys did find value in this video, as always, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Make sure you guys tap into the free live streams that I do every single morning at 8 a.m. Eastern time and also live day trading starting at 9:15 a.m. Eastern time. Everybody have an amazing rest of your day and I'll see you guys in the next video.